End of the session today, I'll be sending out an evaluation which will include all 3 sessions, and we'd really appreciate your completion of that to let us know whether we're going in the right direction, and let us know if there's any other presentations or webinars you'd like us to bring to you. So please welcome Danny.
Thank you, Laura. Welcome back, everyone. It's good to be talking to you again and to be presenting you the final webinar of this 3-part series. Just to recap where we've been, in part 1 of the series we looked at the historical context of Medicare and including the impact of the bulk billing rebates over time. We then had a close look at the impact of the Medicare freeze that will be in place until July 2018, and today it's actually been confirmed in the medical media that the government has no intention of, after the freeze completing, to increase the rates to the level that they should have been at if the freeze was not in place. They'll be starting from the level that they are currently at in July 2018. So that means that a standard consult will, from July 2018, will still be $37.05 for an item 23, and so over time they will then only be indexed from then onwards. In part 2 of the webinar series, we considered the strategies for responding to this financial challenge. This includes also an analysis of the process for fee setting, and we also investigated a couple of approaches for calculating fee increases, and I hope you found that useful. We also considered the operational strategies that could be in place for creating a more sustainable practice, such as looking at strategies for maximising the value of the appointment book structure, fees for premium services and nursing services, and strategies for increasing operational efficiencies. We finished with a quick overview of how to manage the implementation of a significant change to your fee policy, and you've got those notes there from last week. If you have to go through that process, you might want to refer to those notes to give you some guidance. Today we're going to focus on sustainable business strategies, and in particularly looking at budgeting, benchmarking, and the use of key performance indicators. Hopefully by the end of this webinar you'll appreciate the importance of using these fundamental financial tools to drive the financial performance of your practice. So let's start with budgeting. The purpose of budgeting is really to enable you to look at the actual financial operation of the business measured against your forecast, so your expectations of how the business would be performing. It's really to provide a forecast of the revenue and expenditure that you would expect your business to be performing ahead in the next financial year if certain strategies and events and plans are carried out. For example, if you expect that in the next 12 months or so you'll lose one of your GPs, that's going to have a significant impact on your budget. So you can actually factor in that change, knowing that that's going to occur. Also, you can factor in the impact of the Medicare freeze on the bottom line and see what impact that's going to have across each month of the next 12 months. You could also use the budget to identify areas that you want to target for savings. If one of the practices I'm working with is just putting in a solar system, and so they would be adjusting their budget to take into account that they would be making savings in terms of their power costs. It's important for a family to have a home budget. Therefore, it's even more important for a small to medium-sized business like a medical practice to have a budget. But it's interesting that I find that when I ask practices about whether they use budgets or not, I estimate that less than 50% of practices actually use their budget. I suspect that's probably because medical practices act on such a cash flow basis. The money comes into the business, and then it's, you know, whatever profits are there on hand are distributed almost directly out to the principals. And as long as the principals are getting their regular distributions, I think mostly they're happy without too much more concern. But looking ahead, we know that managing practice finances is going to continue to become increasingly complex. There are more external sources of revenue, and we've had to deal with practice incentive payments and SIPs, etc. In rural practices, you often have to deal with payments that come through from the health service, the hospital system, and in the future, we've also heard quite a bit of conjecture that they're going to have block funding models for chronic disease care, so that patients will register with a practice, and the practice will be paid based on the number of patients registered with them, and not necessarily on a fee-for-service basis. That's going to make it even more and more important for practices to have a budget so that they can plan for how they allocate the finances that they receive from that registration to the services that they provide. On the screen there, you just see an example of a budget, and this is a very basic one just to explain a couple concepts, and then I'll jump out of this slideshow and show you a bit more information on an Excel spreadsheet. But looking at this slide, I think that what it shows you that for any budget there are really only three key elements, and that is income and the different budget lines that come into income, and expenses, and then the final element is on that slide is listed as surplus or deficit, otherwise known as profit. Under income there, you'll see that in this budget example, we've separated out the fees for the practice compared to fees that are coming into the hospital, PIP payments, for example, and other service fees coming into that practice. So what the budget does is to enable you to define different budget lines so that you can track where the income is coming from. And it's important to understand that with practices getting more income from other sources, it's not just about monitoring the fees coming in. It's about knowing where that other income is coming from as well. In terms of expenses, they're the more common expenses that we see in practices listed there. Most practices will have other expenses that they're trying to keep a track of, but these are the key ones that are used in this example. I'll just jump out of this show here and onto an Excel spreadsheet. I've just got to check whether you can still see what. Yes, you can see that now. Good. So this Excel spreadsheet has that budget there, so that's the budget for the next 12 months, and you can see that we've looked at the variation in dollar terms there, but also the percentage of variation. So we can see we're expecting fees to only go up 2% here. We're expecting, for some reason, a significant increase in fees in hospital. So it gives you an idea, a way of measuring the budget for this year against the previous year's performance and understanding the variations that you're expecting. To put that budget together, though, we need to break it down into more of a monthly scenario, and this spreadsheet gives you an example of using your previous financial year's figures and adjusting those and putting those figures into each month to work out the cash flow and the costs that will occur over the course of that next year's financial year. I guess this is trying to explain in as simple as way possible how to construct the budget. I think in most practices you would use some formula for working out your expected fee increases, and knowing whether you've got additional doctors or not, you would have to adjust your expectation around fees. Or if you had, for the example I used before, if you had lost a doctor for a period of time, you would need to factor in that loss of revenue through these income lines. There are some items that you get paid that don't come in regularly as a monthly payment, and the example here I've used is PIP. And we know that PIP comes into specific quarters in as revenue, and so it's important to actually identify when that type of revenue comes within the specific month. The same thing also happens when you're looking in your expenses here. There are times where things such as council rates you would pay once a year, your accounting fees would only be paid at certain times. And the other really important one is to look at with your salaries and with your wages. I'm just trying to find where that is. Here we are, sorry. That through the year, this example shows $5,000 allocated for every month, but it's important to actually keep in mind that for 2 months in every year, we have 3 pay periods, and so you actually have 2 months through the 12-month period that you actually have to allocate a higher rate of expenses through for your wages. Something to watch out for. So you can see that in the end, from 1 month to the next, the actual total expenses can change and the net position of the practice can change. So one of the useful things for a budget point of view is for you to be able to forecast what the impact is going to be on your cash flow through a period. So in this period here, we can see that in that month the cash flow is quite high. In the following month, the cash flow is expected to be quite low, and so you can plan for those adjustments as you're managing the cash flow within the practice. It's also possible to, if you haven't got a spreadsheet like this, or you don't want to set one up like that, it's also possible to use the budgeting functions within your financial software. So My QuickBooks or Xero, they would all have a budgeting function in them, and one of the good things about that is that it can create a budget for you for the next 12 months automatically based on your previous financial year, and then you can go in and make the adjustments as you see fit. So it would actually do a lot of that work for you. The other thing I would like to show you here is then the part that I use for reporting, and so this part you can see I break it down into a first quarter, second quarter, third quarter, and the final year-to-date figures. It's possible, if you want to go into the level of detail, to actually report against your budget every month, but in my experience I've found that within a month there are too many variables that impact on that period that can skew your figures. For example, if you've got a doctor or two who are taking leave in that period, your figures might be skewed. So I've found that working out or reporting against a budget every quarter gives a truer representation of how the business is flowing. if you have a particular budget lines such as wages that you're wanting to keep an eye on every month, you could probably do that as well. But overall, I'd suggest that a quarterly report would suffice. So in this report, what it does is enables you to compare the actual income and expenses against what you've budgeted, any variations, but also a comparison with what happened last year and the variations from last year. I think it's important to look at both aspects of that, because it's possible that you might have put in a stretch forecast for fees. You might have had an ambitious forecast for the fees that you would generate this year, and in your report actually have achieved a below budget result for that period. But at the same time, if you compare with last year, it might demonstrate that while you haven't hit your budget, you're actually ahead of last year's result. So it's important to be tracking both. How are you going against your budget forecast, but also how are you performing against last year's results? When I'm looking at these reports, I think the things that I would tend to hone in on, the key areas that I think are worth looking at is the importance of your fees. The other big factors are rent. Although your rent is something that doesn't vary a lot, you usually know that amount, and your budget should be fairly well on track with that. The area of variance that has great impact on your expenditure is your wages, and that's the area to keep, I guess, keep most attention on. The other areas that I think are also really important is around your utilities, such as electricity, gas, telephone, and also your supplies in terms of medical supplies and office supplies. Just taking a step back now to the presentation. There are some traps with budgeting, so things to be aware of. I guess firstly, being aware of setting unrealistic expectations. If you do have a stretch forecast and an expectation that is ambitious, be clear to everyone that that is what it is, so that you, I guess, don't create false expectation in terms of what can be achieved. It's really, the budget should actually be set under realistic terms, so that it can be achievable. If you stretch it out too much, you may actually set yourself up for failure. The other trap is providing too much detail. Where possible, to simplify it as much as you can. And that relates to the next point of not investing too much time and effort for the value that you get out of it. So it's important to have a budget, it's important to invest some time in making it work, but it's a matter of doing it as efficiently as possible without investing too much of your time and effort to do so. Being aware of using the budget to drive your decision making is important as well, because and I've worked previously in the public health system where all of your decision making is based on your budget, and while the budget is important in a private practice, I think it's most important to make good and effective decisions around service delivery and outcomes, and then reflect then on your budget and how that can be achievable and whether or not it's within scope. So it's about priorities. Don't let the budget drive your decision making. Be clear that the budget is a support to your decision making and not the driver. The other important part is being aware of focusing too much on cost containment at the risk of not actually looking at revenue opportunities. So, for example, in a budget, you might, if you spend a lot of time and effort, be able to save $10,000 within your budget, and that's an important thing to do if you can save $10,000 across some of your expenditure. But if you if you're doing that at the expense of not investing time and effort in terms of building revenue, recruiting a new doctor, or starting up a new service and investing that time that can create revenue, you're not achieving a better net position. So keep in mind the balance. Important for us as practice managers is to look out for opportunities to generate revenue as much as we are looking at opportunities to contain costs. The next important part of a financial tool is benchmarking, and benchmarking really enables us to determine how our practice is performing against other like practices. It enables us to determine if we're actually on a par with industry benchmarks, and if not, to gain a better understanding of why not. With benchmarking, it's important. Benchmarking also provides us with the tools to look at, are our targets being achieved from one year to the next, or as we're monitoring those benchmarks throughout the year, but also to identify the areas at which our practice has a strength, or some areas in which our practice might seek to improve against industry standards. Example of some of the key areas for benchmarks is, I mentioned before about in expenses monitoring drugs and supplies, consumables, comparing your practice with another practice and how much expenditure they commit to those areas. Rental of premises, and there can be a huge variation between practices and how much they pay for the rent of their premises. Salaries and wages, as I mentioned before, is a really important component, and comparing how your practice is performing around salaries and wages. Are your staff costs too high or too low compared to the industry standards? And also looking at the overall profit position. What is the net profit position, and the percentage of overheads compared to your profit as well. So this next slide demonstrates an example of the type of benchmarking report that Brentnall's SA provide to their clients as part of the annual financial statements. And so through this report, you can see that it compares the trends over the past 5 years against an industry benchmark. And that benchmark information has come from a company called CCH through benchmarking.com.au, and most accountants would be able to access that type of benchmarking information. They have to pay for a license or a subscription to access that information, so it's probably better for you as a practice to see if your accountant can source that rather than you having to try and pay for that information yourself. So that in this report, it shows on the right-hand side, you can see there are indicators for how the practice is performing. The green ticks are areas that it's doing well, the crosses areas that it's not doing so well, and it's an easy sort of dashboard approach to see that, well, which are the areas that the practice is performing well in and which areas are needing consideration. It's important, however, to be clear about the context of your practice compared to some of the other practices that you as part of benchmarking, because there may be some particular issues in your practice or particular things that your practice does that pushes it outside of the normal benchmarks in the industry. And the example I would give is that I work with a practice that is a teaching practice, and they have at the moment, I think they have 5 registrars on board. So their salaries and wages component, because the registrars are employed, their salaries and wages component pushes their benchmark for right up above, well above the industry standards. So we make some adjustments for that in terms of how we're interpreting these benchmark reports. So the benchmarks, if your practice is way above or way outside of industry standards, there might be particular reasons for that, and it's important to understand those impacts. But I hope you can see that this type of information would be quite useful for reflecting on how your practice is performing compared to those industry standards. This next chart is part of the benchmarking reports as well, and that's particularly useful for viewing the trends in terms of income and overheads and then net profit over time. So you can see there how your profit is tracking and what impact income versus expenditure is having on those profit margins. And that's a useful thing to be monitoring over time. I guess one of the things that I've found though is if in your practice you have adjustments to your full-time equivalent number of principals, for example, you may actually have to adjust those figures to recognise that you have more or less principals involved, because your profit should go up or down according to the FTE of the principals that you have within your practice. So like I said, that you can get benchmarking information hopefully through your accountant if they source that through benchmarking.com.au. The other company through Cutcher & Neal, who are one of the sponsors of AAPM at a national level, they also have been involved with a project called Australian Medical Benchmarks, and if you Google that, you can see that they have an opportunity available to practices to actually sign up with them for a subscription, and then you can put all of your data into their system, and it will then help to create reports of how your practice is comparing against all the other practices that have put their data into that system. They've got the appropriate checks and balances around privacy and the use of that information there, so that's another option for you to consider if you're looking to try and tap into benchmarks. The good thing about A and B as an option is that it means that you can keep going back and adjusting your inputting your data yourself and not relying on your accountant to do it. The challenge that I've found with their product though is that it's you have to put the data in by the month for every time, and that can be quite time consuming. So just for your information, it's worth having a look at and working out whether that product's right for you or not. Just to let you know that I don't receive any kickbacks for giving you that information, by the way. There we go. In terms of the next part that I wanted to cover is around key performance indicators. KPIs as it's written up there. We hear a lot about KPIs, but usually we hear about it in terms of football. Football teams seem to have some of the most stringent performance measuring systems in place, and they're a really good example of how they use KPIs to determine their performance. And so the coaches will identify with their football team which indicators are going to demonstrate whether they're actually on song and whether their team is performing at the level that they expect. It's similar within a practice in any business to actually identify what are the indicators that demonstrate that your practice is performing at the level that it should be performing at. Key performance indicators really are important for providing your principals and management and staff with an overview that the business is heading in the right direction. If you are able to identify the critical indicators, it will help your practice to determine whether it's being successful in its goals and objectives and whether targets are being achieved. It's also useful to identify areas that and demonstrate areas for improvement, but conversely it would also identify areas where you're probably not improving at the level that you would like to improve at. I think the most important thing to take out of the title Key Performance Indicators is the word key. You in a practice could have hundreds of indicators of performance and measures that you're trying to measure, but I've found that the practices that do this best are really strategic about identifying what are the key indicators that relate to their strategies and objectives and goals that demonstrate that those goals are being achieved. You're probably better off having 5 key performance indicators that are really relevant and meaningful than having 25. There are non-financial key performance indicators, things such as quality of service, professional development hours, issues such as monitoring how many patient complaints that you receive, how many patients accessing your information off of your website, those sorts of things. So there are non-financial indicators that can be looked at. But today I'm going to talk more about the financial and operational indicators that are more commonly used in medical practices. In terms of the financial key performance indicators, and these are usually the indicators that may be part of your annual financial statements received from your accountant, but these look at overall the examples I've got here include the patient fees per doctor, so how much income is being generated by each doctor through their fees, or having that broken down per principal, looking at wages overall as a percentage of total revenue, looking at revenue per employee or per doctor, so to actually see how much, monitoring how much revenue you're making per provider, looking at the net profit per principal, so how much profit is actually being made per principal and monitoring that. This next one, the net profit as a percentage of gross fees, I think this is a really important indicator and something to consider. So if we measure the net profit for a principal as a percentage of their gross fees, we get an idea of the value that they have for being a principal compared to being an associate. So for example, if a principal is generating a net profit of 80% of their gross fees, that means for effectively if they were like a contracted doctor, they would be thinking that they're receiving 80% of their gross fees, and that would be a pretty good result. So if a principal's receiving 80% of their gross fees, and your contracted doctors are receiving 60 to 65%, you can see that the principals actually are getting value out of being one of the owners of the business. They're receiving, potentially a 25% better margin for their investment as a business owner. Unfortunately, what we see a lot in practices is that the principal is actually only generating maybe 55% of their gross 55% in terms of net profit of their gross fees, while the contracted doctors might be taking their 60 to 65%. So in a practice like that, if you then asked an associate, are you interested in becoming a principal, and they looked at those figures, they would say, well, not really, because if I become a principal, I'm actually receiving less for the work that I'm doing than I do as a contracted doctor. So that's an indicator that I would suggest that you look at quite heavily, because it's a real marker about the profitability of the business for the principal compared to what the contracted doctors in your practice are earning. And realistically, the target for that should be that the principals are at least receiving 10% higher as a percentage of their gross fees as a net profit than what you're paying to your contracted doctors. That would demonstrate that they're getting at least some reasonable return on the investment that they've made as principals. I hope you follow that, because it's a really important point, and one of the key indicators that I think that we should keep an eye out on. The last one there in terms of cash and debt retirement is probably more just about looking at cash flow and also the amount of debt that is sitting there as a percentage of your fees generated. If we look at some of the more operational type of KPIs, one of the measures that's quite crucial is to look at the average or gross billings per hour. So how much revenue is each of your doctors generating per hour, and for some practices they look at that per GP, so they can compare across their GPs and see how the different GPs are performing with their different approach to practice. One of the challenges with that indicator is actually working out, well, are you measuring the actual hours your doctor is working, or are you measuring the hours that they are scheduled for consulting? And I would suggest that you use the scheduled consulting hours, because it's pretty hard to keep track on the actual hours that your practitioners are working, and you'll continually chase your tail trying to get accurate information about that. Another indicator is the average number of patients attending per hour. For a lot of practices that may be around the four patients per hour, but if you're a practice that there's got high demand and need to see a lot of patients to get through the workload, or the doctors have 10-minute appointments versus 15-minute appointments, then that might go up to 6+ patients per hour. The average fee per patient, I think this is a really crucial figure. It's the average fee generated per attendance in the practice, and that's important because with that figure you can actually work out what the expected income for a GP is going to be within your practice, compared to another practice if what their expected income is for the same style of work. When GPs sit down to negotiate their contracts, they often talk about, well, what percentage are you going to give me? And the difficulty with that type of negotiation is it doesn't really mean a lot, because if you offer a GP 65%, but your average fee per patient is only $55, that may actually be less of an offer than if you offer them 60% with an average patient fee of $75 per patient. So the average patient fee is a really important indicator of the value of what a doctor can earn in your practice, and if you can reflect that to them, it's a good part of the negotiations that you can do with your potential doctors to promote that, well, we're offering 60%, but in this practice you generate a lot more revenue for every patient that you see than in another practice. We talked last week about the importance of the bulk billing rate, and that's another indicator that's good, really worth tracking. I think tracking staff to GP ratios is important. And I would advise to actually breaking that down in terms of looking at admin staff compared to GP ratio, nursing staff to GP ratio, and then your overall staff to GP ratio. Just to give you an indication, anecdotally, I see that practices on average around the place have one admin staff per GP working in them. Now, there might be variations between different practices and how they work, but on average, that's what we're seeing. If you just looked at all of your staff to GP ratios, including your nurses, you could end up getting quite a skewed figure on that ratio, because your nurses are contributing as providers, and so it's important to probably separate that out and look at your nursing versus GP ratio and your admin staff versus GP ratio as two separate figures. Debtor days is important if you're trying to follow up accounts and looking at your debtor figure and trying to manage and reduce that debtor figure. Some practices monitor their billing profile and they target certain items that they're trying to generate income from, and I particularly encourage practices to be monitoring around their higher billing items that we talked about last week, so health assessment, chronic disease items, home medication reviews, some of your mental health items, so the things that potentially could be different, or the targets that you're trying to achieve within your practice. Attendances, obviously important to monitor your attendances. Average waiting times, for some practices their waiting time is really crucial when they mark the quality of what they provide in terms of lower waiting times. Other practices don't worry about waiting times. So there's an example where it really depends on what your goal is about whether that performance indicator is worth monitoring or not. And time spent in consults, so that's probably a good indicator to be looking at, your average time spent in consults, and that would then help you inform you about your appointment book structure, and do you have your appointment book structured to actually provide the services that you're trying to provide through the consultations. Just in terms of these, I can imagine you thinking, well, how do we get this information? And I acknowledge that it can be difficult at sometimes to generate some of these reports. And we talked last week about the challenge of actually generating a report for bulk billing rates, that some software can do that well while other software can't. So I think it's important when you're looking at what key performance indicators you're going to use is to also consider how readily available that information is. If it's going to take you hours and hours of work to generate a report for a key performance indicator, you might have to reconsider whether that's worthwhile doing or not. And that's the difficulty we have. Ideally, unfortunately, the people creating the medical software aren't consulting with the leaders in the practice management industry who are saying that this is the type of information we need to be monitoring. It would be nice to have a software provider who could actually provide a dashboard of all of these key performance indicators with a very simple report mechanism. So I guess just keep in mind you've got to weigh up the time that it takes you to pull this information out compared to the value that you're getting out of it. And hence I suggest that the key performance indicators should be kept at a minimal number. Identify the ones that you're really going to track and the ones that are going to make a difference to you identifying whether your business is a healthy business and tracking well, or whether there are some areas that still need to work on in terms of performance. I want to just move to talking about an annual performance reporting cycle. So all of these indicators, the budgeting, benchmarking and key performance indicators all become part of your reporting, financial reporting within the practice. And this slide just sort of demonstrates what happens usually in a practice around the annual reporting cycle, or an ideal scenario, shall I say, because it doesn't always happen this well. But usually from after the end of the one financial year, the practice managers busily try to finalise all the financial information and send that off to the accountant, hopefully as soon as possible. If that is done fairly proficiently, by September or October, the accountant may be in a position to come back to the practice and present the annual financial statements. one of the things that I'd suggest, if it doesn't already happen, it's really valuable for your accountant to actually present and talk through those figures with your principals, and ideally with you as the practice manager sitting around that table. It's a great opportunity for professional development. It's a great opportunity to improve the financial literacy of your principals, who may not all understand the financial statements that are provided to them. Meanwhile, while the accountant is working on the annual financial statements and you've finished off your financial information that you've sent off to the accountant, the next step is to actually start preparing the budget for the next financial year. And the suggestion there is to try and get that done through July, August, September, so that when you meet up with the accountant, when the accountant comes and presents the annual financial statements, you would also have on hand a budget for the forecasting for the next financial year. So that time with your principals and the accountant and yourself can be a really rich time of setting the scene for what the financial strategy is for the next 12 months. Throughout the year, obviously, things don't always go to plan, and there are changes that are made. You might lose a couple of doctors that you didn't expect to lose, and so you may go back to your budget and reforecast on a quarterly basis to adjust your budget accordingly. I would say, though, that if your budget's not too far out, if you don't have a significant change, I wouldn't go back meddling with your budget all the time. I would leave it as it is and understand the variables that have happened through the year that have impacted on your budget. It's important to do your internal reconciliations on a monthly basis, but like I said, from a financial reporting to the principals and through to management, I would actually do that on a quarterly basis. So every quarter, at the end of the quarter, to prepare the report of your budget, your actuals versus your budget, and some of your key performance indicators, and to present that back to the principals. I've got on there about delegation of authority, and I think it's also worth noting that the budget that you present to your principals, once a budget is presented to the principals and they basically approve that budget, what that does for the practice managers is actually provide them with a basis for decision making and the ability and the delegation to actually manage the finances of the practice within that budget. And as long as you're managing it within the budget and it doesn't exceed your position's financial level of delegation, the practice managers should be able to make a lot of decisions without autonomously, based on having that budget in place. And so that's one of the things that I would encourage to look at the budget helping you achieve. If you're having to go back and request approval for minor expenditure all the time for things that you know need to be purchased, then you might find that your budgeting process actually helps you to get to a point where you've got more delegation of authority to make those decisions autonomously, as long as they're within the budget that is set by the principals. And the bigger your practice gets, the more important that becomes, because the bigger your practice gets, the more cumbersome it can be around the decision making for this. And we don't want to have you don't want to bog down your decision making for minor small financial outcomes. You actually want to prioritise your decision making with your principals around the strategic and big picture items that you're dealing with as a practice. The other thing I was going to say about your reporting, that when you're reporting to your principals, I've found that charts work really well. Having a 1 to 2 page type of dashboard report is quite effective. The less big columns of lots and lots of numbers, the better. I find that principals are used to looking at very brief summarised information and making key decisions, and that's what we should be providing them with. So using charts works really effectively, but then having a dashboard of how some of your key performance indicators are trending over time, you'll find that to be a very time-effective way of reporting. It's easier than providing a lot of columns of figures, but also it's easier than writing pages and pages of written reports. So I guess sort of summarising that, it really comes back to looking at the return on investment. When we talk about the value of budgeting, of looking at benchmarks and key performance indicators, that's a lot of work and involved with that from a practice manager point of view, and we need to weigh up that there is a return on investment of that work. And if it's done well and efficiently, these are the benefits that we believe are generated by making sure that you've got these financial fundamentals in place. The first one I've found is that it helps to increase the principal's financial literacy. Not all principals are financially savvy, and in fact, anecdotally, we often hear people say that that doctors might be good doctors, but they're not necessarily good business decision makers. Some of them are, some of them are excellent, and they make some really good business decisions. They know accounting principles and that, but we shouldn't assume that they all know this information. And so providing these types of reports to your principals helps them to learn about the factors that impact on the financial performance of their practice. It also helps to make sure that the financial position of the practice is transparent, and I've been into quite a few practices where the principals say to me, well, all I know is that the money keeps coming into my bank account, but I don't actually know that we're really tracking that well, and I don't know when I ask for information, it doesn't come back to me. By actually proactively providing this information, it enables the principals to be more confident about the position of the practice and what are the issues that are happening that impact on that financial position. I think for you as practice managers that using these reports, it also helps, as I said, with decision making, and also helps you to claim or expect a higher level of delegation of authority in what you do. If you have these reports and your principals trust the information that are provided to them, they are more likely to be saying, well, can you make those decisions independently and report to me when there are issues. The other important thing about the financial reports is it increases accountability. It increases accountability across the whole practice. Sometimes it's about accountability back into the practitioners, looking at things such as their bulk billing rates and saying, well, you know, we could actually be doing better if we reduce those bulk billing rates. Sometimes it's accountability around you know, our stock control and the fact that we're spending so much money on the stock that we're getting in without it being controlled or reviewed. The other thing is that we've seen is practices that have put these measures in have been able to demonstrate improved profitability because they know the factors that impact on their profitability and they can make smarter decisions. The other point I've put in there is about valuation, and that's about using this information to actually demonstrate there is value in your practice and the practice is performing well. If you have a potential person looking to buy into the practice, to be able to provide them with good financial figures to demonstrate that your practice is performing well, but also that there are clear financial reports and a clear process for managing the finances, generates a lot more confidence for that person potentially to buy into that practice. And finally, I think that another return on investment is about impression and reputation for you as practice managers. if your principals aren't asking for this information, I encourage you to be providing it to them. I encourage you to provide to them some reports that to demonstrate how their business is performing, and they will start to appreciate and the service that you're providing to them as practice managers. And so if you're not doing that, I'd suggest starting off with the basics and looking at a budget and putting that budget information together, and then building on from there. But if you provide your principals with good, clear, transparent information, their I guess appraisal of how well you're doing your job will increase significantly. So there we have it. I think we've come in right on time. Hope you've all kept up with that. We've covered a lot today. I haven't been monitoring if there are any questions coming through. We've got a couple minutes before we finish up. Happy to take any questions from you. You may need to use the chat if you can't turn your microphone on. Welcome to have that. But I'll at this stage I guess offer to answer any questions you have. No, so we haven't got any questions. So either that was that says that you understood everything, it was very clear, or you either didn't understand anything and it wasn't clear. So I hope it was the former. I hope you've got a lot of value out of the 3 webinars that we've provided over the last 3 weeks. It's been a pleasure to have been able to present these to you. I guess my encouragement is for you to work out from the last 3 weeks what are the 1, 2, 3, 4 to 5 things that you got out of this that you are going to go and actually implement or do something about within your practice. It's not worth you spending 3 hours of your time to sit through and listen to me if you're not going to go and use that to make a difference in your practice. I'd encourage you to identify at least a couple things that you are going to take on board and change or adjust in the way in which you do your job, or the financial reporting, or how things work within your practice to make a difference. So I'll hand over to Laura. Thank you.
Great, thank you, Danny. It was very interesting, and I certainly had a lot of questions answered. For anyone who is interested, the AAPM WA is having a finance forum in Perth next Friday. And so the accounting firm that Danny mentioned has the benchmarking data we'll be presenting, and from previous experience they are very, very good at speaking, and you will come away with very useful hands-on resources and benchmarking information out of that session. So if you go to the aapm.org.au website, you can still register for that event. I will also be shortly sending out the evaluation and passing on the presentation slides from Danny. And if you do want to recap any of the presentations, we do put the recordings up on our website within a couple of days as well. Although the first one in this series will be a little bit haphazard because we did have some technical difficulties. So it might be a bit dodgy. Otherwise, thank you very much for coming.
Thank you, everyone.
Okay, bye.